Thanks, everybody. I'm Chris Wiley with the Tasty Equity organization. I'm the co-founder with my brother, Pete Wiley. Elena is joining us from our investor relations team. Many of you have probably interacted with Ned Dibble from our investor relations team. He fields most of the inbound calls and Facebook messages and things like that. This is our February investor briefing. We do these every month. We're trying to keep them short and sweet. 15 minutes is our goal, and then Q&A after that. So feel free to ride along with us. We're going to have three topics today. The first one, as we announced, is join our 1,000 plus investors that are with us today. Some of you guys are those investors. Some of you guys who are invested, who were invited today, are in the investment process. It is a multi-step process. You apply for the shares, you get cleared for them through Know Your Customer and anti-money laundering, all those things that the government requires, and then you become an investor. We are also going to talk about why we invest in rapid fire pizza restaurants and why we built locations before COVID and why we are absolutely committed to building them after and during COVID as it continues, and why we invest in Hot Head Burritos restaurants. Again, we have a couple, we're remodeling them. We'll talk about that today and how we have aggressive plans to expand the Hot Head Burritos brand and how your investments with us will fund that. First order of business, for those folks who ask, can we reinvest? Yes, you can. We are offering actually closed in December and then became requalified. We've been extended officially through 2021. Our goal is to raise at least $1 million net capital. Goal is about $2 million, and we're authorized to raise up to $5 million. So we have seen a very interesting phenomena, and I'm really flattered. Of our 1,000 plus investors, 60 or more have invested repeatedly. Many have invested 5 times. We're seeing people invest once a month or once a quarter. And I've had some one-on-one phone calls. And if you invest with us and you would like a one-on-one phone call, reach out to Elena or Ned and they will get that arranged. I'm an open book. I treat everybody like they're a partner in this business. And you guys are our partner. You are our angel investors. I plotted this map last night when we were getting ready. This is the update. There's over 1,000, actually 850 zip codes we plotted, but there were over 1,000 investors. So there are a few that are common. But what you will see is in the 49 states that are covered in the 3 countries, including Canada and India and Bali, I believe, and Serbia, they overlap the areas where we have the gold areas on the map. Those are the area developers for the Rapid Fire Pizza and the Hot Head Burritos franchise system. They are independent of us. They are people who sign contracts with Rapid Fire Pizza franchising, with Hot Head Burritos franchising, and they committed to build 3 restaurants a year. You're going to see some of them stuck with that commitment even in the COVID year in 2020. But it's interesting to see how our investor footprint largely overlaps the gold states. And about half of our investors are near a restaurant. The other half are absolutely investing because they see us as sort of like a, what's the word, an EFT, like a fund, although we're not a fund, but they see us as an opportunity to bet on multiple brands in the fast casual space. We believe it's a great time to bet on this space. It's by luck and good fortune that our restaurants, both Rapid Fire Pizza and Hot Head Burritos, are in the fast casual segment. But the fast casual segment for the last 10 years has grown faster than any other market segment, from QSR, from quick service, McDonald's type things, all the way through Ruth's Chris Steakhouse. And this organization, Technavio, is an analyst in the space, and they are forecasting that despite COVID, they're literally, this you see at the top is the impact analysis of COVID. They believe this market segment is going to grow 12%, partly through new units opening, and that the sales will grow. People are fans of this industry, and our 2 brands are squarely in it. We have been reinvesting in restaurants ourselves for decades. I grew up in a restaurant family. My father was one of the first 5 people at Pizza Hut. He went on to help build hundreds, if not thousands, of Pizza Huts throughout the southeastern United States. We moved every single year of my life to another town. Ray and they went through the IPO at Pizza Hut, which created over 100 millionaires. And those were franchisees who traded in their stock in their stores to be part of the IPO. Dad and his friends got together and got the band back together from Pizza Hut and backed a little company called Skyline Chili out of Cincinnati. Skyline was preparing for their IPO. Once again, it was a 10-store plan. That was the model store set. just like the original franchises that my dad helped do at 10-store modules, kind of at Pizza Hut. When Skyline Chili went public, we sold all the restaurants back. I returned to banking and capital markets, and my brother Ray took his proceeds and became an early Subway operator. He built up to about his first 10 Subways, eventually bought and sold some, but over the course of 20 years, those 10 stores created wealth for Ray and his partner, and they founded and created the brand Hot Head Burritos. Hot Head Burritos, we'll talk more in a minute about when it was and how big it is. The Hot Head Burritos 10 foundation stores created the basis for the franchise system, but then they also funded the creation of Rapid Fire Pizza, another system with a base set of 10 corporate stores and selling franchises. We came along in 2017, 16, created Tasty Equity so that you can invest with us. And we'll talk at the end here, the latest offering from Ray is he's just created another brand in the chicken space, Wiley's Wings, Tenders, and Fries, which we will have a licensing agreement with. So Ray co-founded the brand Rapid Fire in 2015. And again, I'm going to tell you why we invested in this brand. There's 34 locations today. This store we funded it with my son as the franchisee. It was the 8th store. Despite COVID, franchisees in the system opened stores down in New Braunfels, Texas, and Huntington, West Virginia during 2020. There is a franchisee down in North Carolina that has a Gastonia store that's going to open up. We have a liquor license and a franchise set, but we haven't got a location yet in Findlay, Ohio. And we are fans, you see the photograph of self-pour alcohol. Not all stores have it. We pioneered it. We believe in it. So as the market recovery continues, the recovery of our sales continue. This is a sales chart specifically of our 2 rapid fire pizza restaurants that we're invested in. You can see how they cratered like everybody else back in the middle of March, and they've worked their way up, kind of like the optics of the way the stock market's recovered, although it's been going up at crazy high. And even has a bit of a dip this week, as any of you may have seen. The point is, our stores are starting to beat last year, but they are dine-in restaurants. They were 70% dine-in before the crisis. When COVID hit, we were restricted to 50% of our tables. We're still managing to do 80 or more % of our business. We're very excited to see the vaccination waves hit. We're already seeing people come out. You can see the spike in business on the right-hand side of the screen. One of the benefits is that a part of our business developed that we've always worked on, but we believe this is going to stay with us, growing the off-premise business. That's the technical term for online orders, carry out, and third-party delivery. We made a big effort back in 2019 as the third-party delivery companies came to our small towns, and we lit it up with them. Well, in 2020, you can see how it grew even bigger. So it's now 16% of our sales. That's the total amount of the business that is 16% growth in the off-premise. And the more off-premise business you have, the more valuable you are to the institutional investors like these restaurant SPACs, who are our long-term end partners we're looking to work with. Rapid Fire, as I mentioned, was founded in 2015. It caught the beginning of the wave of fast casual pizza, what they call the revolution. Whether you go to a Blaze or a Mod or one of our restaurants, the concepts are similar. But what we did is we went for amazing variety. We have double or triple the total ingredients of Blaze or Mod or Pieology or Pie 5. We even have up to 8 different pizza sauces. Imagine pesto or barbecue or buffalo sauce or white sauces, sweet sauces, hot sauces. You can put any sauce you want on the base. You can do it on your pasta, on your thin crust, on your pan pizza, on your calzones. Soon, some of the stores are going to even have sandwiches. And then you have dipping sauces to put on to dip the pizza in. I guess that's a Northeastern thing. But we have an amazing variety of choices that range from healthy to totally indulgent. The dessert pizzas, you see the Cinnasticks there, range from the cherry pie to the cinnamon sticks to the blueberry pie, which literally fake you into believing you are eating a real pie. We serve carnivores, vegetarians, vegans, and gluten-free folks like the celiacs that are in my family. Fast casual alcohol is a new thing. Most fast casual restaurants, at best, you can get a bottled beer, ranging from Smashburger and even Chipotle had little margarita machines, margarita fountains. We decided to go all in so we can have a date night opportunity. It was a big experiment. We rolled this out in Bowling Green. and a rapid fire pizza location has been adopted at other stores. It will be a part of our restaurants going forward. It builds up the dollar per ticket. People stay a little longer. The Hot Head Burritos brand continues to thrive despite COVID. Some of the stores were in the franchise system were negatively impacted because they were near a plant or a factory or office area that shut down. Our particular 2 stores are doing actually beating last year. I'll show you the chart in a minute. And other franchisees in the system opened 4 stores, I believe. Yep. The ones in Indiana you see on the screen, the ones in Ohio. Then we have a franchisee, a peer of ours, in the Indiana market that came over from a 100 operator subway system. And he is knocking it out of the park. So you see a bunch of coming soons also in Indiana. And then we have a California operator really ramping up. The confidence in the brand is very high. The stores in general have fared very well. And we are we're in dialogue and we're reaching out to the real estate community to go after those defaulted locations from other brands. The recovery continues again for the Hot Head brand. Hot Head spiked right back up. You can see on the left of the chart. Again, the black line being compared against last year. So we've fared pretty well. They were 65% or 65% carry out to begin with. They're now almost all carry out, but the stores have done fairly well. We took this opportunity to invest to remodel 2 of our stores. Hot Head goes all the way back to 2007. It's built up to 78 locations in 15 states. At the peak before Rapid Fire launched, when we diversified the business, they were opening about 1 store every 2 weeks. And now the goal, COVID slowed it down, but both brands, had COVID not hit, were on track to open at least 1 store per month, if not 2 stores per month across the country. Hot Head Burritos is also in even a bigger way growing the off-premise business. Again, in 2019, we had invested in the partnerships with Grubhub and Uber Eats and DoorDash. You can see how the business spiked up, and in 2020, the total off-premise went up even more. We believe that is with us to stay. Our stores that have pickup windows, it's not a true drive-through, but it's pickup window. Order ahead, come and get it. Chipotle model. They are doing well, and we will look for almost all future locations to have pickup window or drive-through access. The key to Hot Head Burritos was an amazing variety change versus Chipotle. The incumbent Chipotle had a simple, reliable product that's made them what they were, and we all admire them. But you can't franchise Chipotle locations. Nobody else can build them. They're all corporate stores. We sail in their wake, and they have had a great year, and correspondingly, we're doing fairly well, at least in the restaurants we invest in. But the mild to wild trademark custom sauces are what it's all about. You can make your food boring and sour cream flushed, or you can cover it in ghost pepper sauce and burn your face off. You make the product what you want it to be, and people are very particular about it, and they buy the sauces and they put them in the refrigerator, and it advertises forever and ever more. But we literally have about twice the choices, from barbacoa and pulled pork and steak, and now we introduce a new kind of steak, and traditional ground beef because people like tacos. And we do all of this in all of the segments in the space, right? We have the street tacos, we have the fried tacos, we have bowls, we have burritos, we have all the things like queso and salsas and such on the side, but we never stop inventing. The brand at corporate does limited time offers every other month or so. You see on the top right, that was teriyaki chicken. We did a teriyaki chicken special, and it was off the hook popular. We brought it back the next year. It was the most popular. It's now a permanent menu item. I mean, we are an Americanized, fast Mexican place, right? But teriyaki bowls are killing it. And the future format that I'm embracing is the Cantina. This is a corporate store. Actually, the bottom corner is one of my stores that was just remodeled. The other photographs are of a Cantina that was built by Ray and the corporate team. We got the fast casual alcohol rolling in the Rapid Fire brand. They decided to pilot it in a Cantina format. It literally created a date night. That's the first restaurant in the nation, by the way, where you can pour your own liquor shots with the system down on the left-hand side, if you can see that. But there's 27 taps. You get a magnetic bracelet, you go to the taps and you pour. It does limit you so you can't overindulge. Coming full circle, in our Hot Heads, again, we use the downtime where the customers really aren't eating in the restaurant to remodel 2 of our stores that we had acquired when they were 5 or 6 years old. The last of the furniture upgrades and such will be in next week. fresh set of new TVs for the dining rooms, and we look forward to the month of March being our re-grand opening. So for those of you that are in the vicinity of Toledo, we'll get special promotions out for our investors. We're not allowed to actually have group events, but we will get some sort of really aggressive promotion for you guys to come in. And we'd love to get your feedback on the new format, how you like it. It's not a major change, really a facelift, floors, ceilings, walls, digital, everything. Quick update on Ray's new concept, Wiley's Wings, Tenders, and Fries. It is not a franchisor yet, but we have a handshake arrangement to do a licensing arrangement. The reason this matters is Wiley's Wings, Tenders, and Fries is Ray's first foray into chicken. We've seen the massive rise of canes, Raising Cane's all around the country. We are splitting the difference between a Raising Cane's and a Buffalo Wild Wings. We're an alcohol-equipped, fast casual restaurant with a drive-through. The business is currently doing 80% of its traffic through the drive-through, but we believe the people dining in traditional bone-in wings with pints of beer is what this concept's all about. And I will say it has roughly doubled the largest grand opening we've ever seen in any of our stores. And now we're watching closely to see if it sustains it. The key to this is we are a multi-brand strategy company. And this is building on Ray's experience. Ray was in Subway, as I described. In this example, he's got out of Subway as Hot Head got fully operational. He sold his last Subways. But in the town of Dayton, Ohio, where it's about 1 million population, it's a small, big town, there are over 30 Subways. There are 27 Hot Heads. Half of them are corporate, half of them are franchisees. There are about 10 Rapid Fires. Rapid Fires have a larger draw distance, more like 5 to 7 miles versus Hot Head and Subway, which only draw about 2 or 3 miles. That's the thing about pizza. But here's the key. If we can go into a town with 1 million people, like a Cleveland, Ohio, like a Toledo market, we can literally put up at least 10 Hot Heads, 10 Rapid Fires, and 10 Wiley's Wings, Tenders, and Fries, and they all benefit. The back office operations behind them are all very similar. So this is about market density, not getting spread too thin. And remember those area developers I told you about who have to build 3 stores a year. Those guys are well capitalized. So we're talking to folks from Indiana to Tampa, Florida, that have the money, but they don't want to operate. They want us to come in as a partner and back a franchisee. That's our strategy. The goal is to commit to 10 new projects each year. Now, the key to this is we have 4 live now. So we have experience in both brands. We're actually the sandbox pioneering all the different technologies that end up being rolled out at corporate, because even though we're arm's length, we are family. Goal is to do 10 a year, but mixing and matching the brands opportunistically. But I'm going to represent this slide from last month's event. By doing 10 a year, here's how the math works. Now, a disclaimer, right? We can't guarantee this is going to work. This is our plan. This is based on 3 generations of operations that built 10-store foundation plans. So if we can raise $1 million in net capital after costs and expenses this year, that could fund, I wrote here, the first 10 down payments, but really the down payments on our next 10 projects. Those restaurants, once they're operational, will fund the next 10 because it creates the down payment cash out of the first year's operations. Then those 20 year 1, year 2 stores will help fund 10 more down payments in year 3. If in year 3 we have 30 restaurants or so, a fully operational and profitable fast casual restaurant can be valued at up to $800,000 each. They range from about $500,000 to $800,000. But at $800,000, our total business value would be $24 million. After you take out the debt, the bank loans that we used to get there, which would be about $12 million, that leaves $12 million in equity that we will have created based on the original $1 million investment and recycling the capital. So to answer a question that always comes up, do you pay dividends? No, we don't pay dividends because we recycle the profits that we create into the next restaurant. We are a growth business. So if we reinvest for 3 solid years and successfully get to about 10 stores a year, we believe we'll create something on the order of $10 or $12 million in equity value for our investors. And even if we get it half right and only get to $5 or $7 million in value, that is a fantastic return. So fingers crossed that we can get through this. We feel like we've been very successful during COVID. Again, back to the original theme, how do I invest or reinvest? today, if you want to reinvest, most of you have seen the offering page. You might have done it on your phone, but it's got that big orange invest button. If you want to add shares, today you need to just click the invest button. If you do it on the same device you used last time, most of the data will populate in the screens for you, and you can just kind of update it and submit. Coming soon, for those of you who've noticed, there's a My Account link on our website. The My Account page takes you to our investor accounting system, which is where it keeps track of your shares. Later in the month of March, and we will send out an announcement, if those of you who are allocating some funds once a month or once a quarter, you will be able to click a button very similar to the way you can transfer shares to a family member or a friend. You can click a button and request more shares. Then our broker dealer will send you a bunch of forms electronically and take care of that transaction. Last but not least, as you see all the promotions, we're trying to create constantly fresh content, pushing out the videos, doing these events. The recordings of every month's webinar are available, so you can go back and listen to them if you care to, if you put up my 20 minutes of yapping. There are little short sound bites out of them that are 20 seconds or 3 minutes. All of that is available through our social media and mainly on our YouTube channel. But please, as you see the stuff go by, you may have already invested and you're already there. But if you like those posts or share those posts, the more you expand and expose us to your networks, the more we all grow together. So please, please, please follow us on social media. Elena, with that, are there any questions or chat that's come up?
We just got a chat right now because everyone's been great. They've been not trying to interrupt. They said it's expected here in Greenville, South Carolina, the population will grow in the next 3 years by 1 million plus. We are expecting so much, and the market here would be hot for this.
I can tell you, so we have an operator down there. They are specifically a rapid fire area developer. Excuse me, I'm going to take the slides down and go back to my smiling mug here. We have a rapid fire area developer that is in the Carolinas. I want to say they have an operation in Greenville. We have talked with them about partnering on stores. Again, it got waylaid because of COVID, but we're absolutely looking at that market because the key for Tasty Equity is we are the corporate and finance and back office and data and HR partner. We're here to do the banking. Our job is to allow the franchisee to arrive and drive. They can show up and operate their restaurant. As we like to say, keep it staffed, give great customer service, and don't run out of food, right? That's the franchisee's job. Our job is everything else. And by working with the area developer like we have done in the Carolinas and in 14 other states, they help us pick the location. They're on the ground. They're the air cover and the supervisory operation. We're here to help them run it. Any other questions?
So, Chris, thank you for that. We got 2 more questions. I'll take the first one that came. Mr. Kyle Demody said, do we expect to build any restaurants in Louisville, Kentucky?
I'm very interested in Louisville, Kentucky. In fact, the social media marketing guy who runs our social media marketing, not for the offering, but for our restaurants, Matt Plapp, if you've ever seen him or his MPTV shows, is from Louisville. We have a very active Indiana area developer that has rights, I believe, in that area. Again, we can partner with them. So that we have talked actively about partnering there. We have not looked at locations there yet. My biggest push, candidly, is determining how fast we can raise capital. Today, we have about $20,000 to $25,000 per week in applications to buy the stock. We're working to overcome some technology challenges with our partner that handles the invest form. If anybody on this group tried to invest and then was repeatedly asked to update your payment method, there is a technology challenge with one of the vendors, and we are replacing them this month. And then we will really ramp up the rate of capital raising once we solve that technical glitch, which developed about 2 months ago. But the point is, we will begin selecting locations as the capital builds up in the bank. And the good news is we have over 100 people a week apply to buy the stock, and about 50 become shareholders out of that. And we're looking to get that process to be more efficient so we can start committing to 10 projects a year, basically 1 project every month or so.
Exactly. Well, that's a great segue, Chris, because it gets into the next question. Will you be able to discover an Amex from people who want to invest? So I'm assuming this is getting into the payment issue. That was a question.
We should be able to accept any credit card. I know, so the technology partner that's being switched out is a much more high-tech payment processor. So when you click the invest button, you fill the form out, they have a much more sophisticated connection for the credit card processing. So it should take any credit card. I will ask that question today. Nilena, if you want, we could even get back to that person. But this new provider, even though the securities laws don't allow us to accept it, they are so advanced, they're accepting crypto payments from certain coins. But we can't do that, unfortunately, in the US. But we will be able to say, ACH will be much more reliable. The credit card transactions, Visa, MasterCard, and otherwise. But I will specifically ask if American Express, which I was a card-carrying Amex guy for 20 years in the corporate world, if it works. Yeah, I'll even ask them if they take Diners Club, if that's still around.
I know.
I bet you had a Diners Club card, Atlanta.
No, I didn't, but I was, well, I'll let us get to the questions, but I actually was laughing with my mom about Amex, that I was saying that they were always a pain to book travel with, but I won't get into that. Mr. Leon Jenkins, he said, are you interested in NYC in Pennsylvania?
We are. We had a operator in Pennsylvania, in this case in this side, Western Pennsylvania, that was very active or wanted to be involved with this, but then they got distracted with some problems in their other businesses. They're involved in some other franchises. We stay in touch. But yes, there's two things to think about. A, we're interested in Pennsylvania for sure. Pennsylvania, it does have issues with liquor licenses. So we would have to do more or less alcohol-free restaurants unless you buy out another restaurant that has a liquor license. That's one way to get them. So yes, we're interested. If you're in that local market and you have some connections, maybe you're in the real estate, maybe you're more of a private equity investor, or you might want to partner on a specific restaurant. We are open to all options. The purpose of our public offering is to raise the general cash reserve for the down payments on the restaurants. But in some cases, like the area developers, they will be a 50-50 owner in a restaurant. They put up half the money. And in some cases, they have local investors in tow who would help. So New York is also an issue for liquor licenses, but I know we have some activity. There's some stores opening in New York. There's some operators there. So, if you have suggestions for locations, absolutely write to us through contact at Tasty Equity, or if you've corresponded with Ned or Elena through investor relations at Tasty Equity. We're beginning to catalog that information. Someone had asked right before we started the event if we're going to track on our website the coming soon locations. My goal is to, much like if you look at the rapidfirepizza.com or hotheadburritos.com, and they have the coming soon locations, we will have a page much like that that's specific to our restaurants. But we have been a little shy about starting to put that up because we've had false starts, both with landlords, with financing. But as I touched on in last month's event, under the CARES Act, SBA just announced special incentive financing. If we select a location and get an SBA insured loan funded by September, they will make our loan payments for 6 months. They will allow us to do the transaction with as little as 50% of the normal amount of down payment. So we're on the warpath looking at locations, like I mentioned, those empty Steak and Shake locations, other sites with drive-throughs. And then we're also looking at 4,000 and 5,000 foot locations that are suitable for the bar restaurant, the cantina or tap room format. So it's going to be a very busy next 90 days of assessing locations. So if you have ideas or you see a vacant restaurant location that used to be a great place that didn't survive COVID, let us know, please. It's a group effort. We're all in this together. Hey, thanks everybody for joining. We're about 30 minutes in. We got one more?
Just one more.
Please.
That's a great segue. Mr. Christopher Hickman asked about what would be the last day to invest. I answered him via chat. That obviously it's ongoing, but about the incentive that you just spoke of. So if you just reiterate that for Mr. Hickman about, we're obviously always going to be we'll always take investors, but about the incentives right now that expire in September.
Oh, so yeah, let me clarify. So first of all, the SEC filing, which is what allows us to do our offering, is good through, I believe it's either December 10th or December 16th. And depending on how we're going, how close we are to our goals, we may in fact extend for another year. But our goal is to get to, if we can get $1 million net capital raised, which really takes raising about $2 million through all the expenses and marketing and all that stuff to get there, and the startup costs on the restaurants. Our philosophy is for every $200,000 raised, we can get a restaurant started. keep it simple. So you can invest with us up until the end of the year, and possibly we'll extend another year. The second point, though, is anybody who invests with us, whether they do it now or whether they do it, after September, October, November, December, they'll still benefit from any of those projects that we are able to get buttoned down, leases signed, and SBA loans funded in September. We'll all benefit. It's not like you're missing a tranche. Our urgency is I need as much down payment capital as possible prior to September so I can sign as many of those loans as possible. So for us, our push, our full court press is from now until September. And we hope to raise $1 million during that time. And basically, we need to double the pace at which we're at right now. And we can do that. We can dial up the advertising, but we're going to take the next 2 weeks and swap out this tech vendor so it'll be smoother for everybody.
Yeah, again, we had a little bit of a technical glitch, but we're definitely getting the attention for the investment.
Yeah, it wasn't the offering. It had to do with the way credit cards are processed. And again, some of you may have experienced us having to contact you and get an updated copy of your credit card. It's just a giant pain in the butt for all of us. We're really excited about this more boutique, high-tech partner, and they should be operational in 2 weeks. So
Absolutely.
Thanks, everybody, for joining us today. I see almost everybody survived the whole 30 minutes. Bravo. Again, don't hesitate. If you want a one-on-one conversation, we'll make it happen. We're here. You are part of our company, and Alana and Ned will help coordinate that for you. So have a great day.